Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.
Building a bridgehead in Eastern Europe. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Mining Forum Americas in Colorado Springs. Joining me today is David Rae, President and CEO of DPM Metals. David, welcome to Kitco.
Thank you. Good to be here.
DPM is a relatively new company in as much as the name. You were formerly Dundee Precious Metals. You've just changed to DPM Metals because you've just done a big transaction which changes the focus of your business a little bit, which we're going to be talking about very, very soon. A great second quarter, 70,000 ounces of gold equivalent at one of the lowest all-in sustaining costs in the sector, just over $1,000 per ounce. Record financial results, including a whopping 69 to 70% margin, which is some $2,200 per ounce. Your share price is up about 125% year on year, and you now have a $6.6 billion market capitalization, and a listing is coming on the Australian Stock Exchange. It's been quite a year so far, David.
It's certainly been busy.
Well, let's start on some of the results there, and the listing on the ASX. We've heard a number of companies looking at potentially listing on the ASX, a number of companies delisting from the Toronto Stock Exchange. Most recently, Newmont said it will voluntarily de-risk because of a lack of liquidity there. What are you looking for with your ASX listing?
So this really came from marketing with the Adriatic CEO, where we were, explaining the deal and why we thought this was good for Australian investors to stay with. During the course of that set of meetings that we had over 4 days in Australia, one of the things that became really clear was there was a niche or an opportunity where investors would be interested in a high margin producer with a growth portfolio, a growth profile, heading towards 600,000 gold ounces equivalent. And that was something that was really sort of lacking. On top of that, of course, we've got a track record of returning capital to shareholders. So because of this, there was a real appetite. So we were talking to the Adriatic shareholders with the idea of, think about coming with this deal, stay with the shares, this type of thing. But we realized there was an appetite there. So the decision really came from that set of meetings that we would take a secondary listing. And that's due to take effect at the end of this week.
Do you anticipate getting or generating a lot of liquidity, a lot of trading in Australia?
It wasn't the primary idea as to why we were there. We're very happy with the TSX. Initially, we'd taken the view that with the cash component of the deal, that probably wouldn't be necessary. But we really felt there was something positive in terms of interest that we should really at least remain exposed to, and then consider how we might utilize that as part of our growth ambitions.
Now, you've just completed the acquisition of Adriatic Metals. Congratulations there, David. What does that do for the company?
So it's 2 weeks old. We're literally still busy with the integration steps. We had a profile which was in the near term affected by one of our operating assets, Chelopech, coming offline. And that's been roughly 100,000 ounces of production for the duration of the life of mine. So that was going to provide a drop in production ahead of a ramp as we start to bring in Čoka Rakita and our other opportunities that we have. So this is actually a great fit in terms of closing that gap. So we moved straight away in 2027 to 425,000 ounces from somewhere at the 300,000 ounce gold equivalent range now. So it provides this positive profile at the same types of margins that you had in the introduction. So exciting in that way. And plus, we see this as an asset in a new jurisdiction in an area that we're already in, with an asset that has exactly the same needs as where we believe we've demonstrated competency in our asset in Chelopech. And all of this is actually feeding into what we're going to do in Serbia with Čoka Rakita, which is a very exciting asset we're expecting to come in 2028. So a whole bunch of different reasons why it's positive. It's right in our backyard. It's what we do. It's a high margin producer, and it's got a longer life than our current assets with exploration potential.
Now, this obviously gives you or intensifies your regional presence there, your regional focus on Eastern Europe. That's quite a differentiating factor. It's quite a unique selling point. Why is it important for a gold mining to have that, a USP, a differentiator, in addition to obviously great assets?
Well, I think you really want to be trying to differentiate yourself in some fashion. So it's not been the most popular place to have a business in the Balkans, but we've demonstrated consistent success for a number of reasons since we first arrived there in 2003. Great people, work ethic, country that's very clear in terms of what you have to do. Can be somewhat slow in terms of Bulgaria, in terms of how things happen, but you can have confidence in them happening. And it's been a place where the people that we've had employed and recruited have brought a tremendous amount of skills that have really differentiated Chelopech. So while we look at it and we say, this is Bulgaria, why should I pay attention to Bulgaria? the things we've managed to do with our primary asset in Bulgaria, the types of things that people want to know about in our business around the world. It's got a reputation of really standing out from an innovation and productivity point of view. So you then start to build on that with the acquisition of Vares, and you add to that with Čoka Rakita that's coming in, and you have 3 assets, same mining methodologies, same equipment, the types of things that we can devote our skills and innovation to really building. And like I said, coming back to it, the people and the skills that we've been able to find in the area have been tremendously successfully moving things forward. So as an example, you might think in assets like this, you have a lot of expatriate people coming in to help you to do the operations. We haven't had a single expat in the operation at Chelopech for a number of years. And that's because even our chief operating officer comes from literally down the road. We found really a pool of tremendous capability there.
I mean, that's a good synergistic factor. Are there sort of broader regional synergies that you can enjoy from having so many operations in that geographical region?
Yeah, of course. I mean, from supply chain, critical spares, all of these things, there's going to be benefits. But I think probably the one that will be the most impactful is the ability to make change quickly across a range of assets, because you've got these like operations and like practices, equipment, techniques, and things like that. So that really helps us to turn around where Vares is at its stage of development through to full operation and really start Čoka Rakita off with success. So yes, those synergies are clearly there beyond the people. It's also supply chain and other things, all of which, of course, helps us when you're talking about maintaining those margins rather than allowing that to drift with any inflationary pressures.
That leads one to think of one of the benefits or one of the key advantages of Agnico Eagle Mines in the Abitibi. They've got that concentration there, and they're doing very, very well there indeed. DPM, you've also refocused the business in recent years. For example, moving away from the smelting in Namibia to focus specifically on the production. Can you tell us a little bit about that? And is that particular part of the journey, has that come to its conclusion?
I think the main thing is you have to focus on your core business, where you're taking things going forward. And we've done a lot of work and invested a great deal into the smelter. Really happy where we've taken that in terms of its performance. But it was no longer necessary for us to continue our mining business. And as a consequence, it was better in somebody else's hands. So we made that decision and we moved on. And it's the same thing now when you talk about concentration of assets, where we got this opportunity in Europe. If you look back 5 to 10 years ago, we didn't see that. We weren't finding the same level of discovery in Europe. And as a consequence, we decided to split our strategy with something in the Americas and something in Europe and Africa. And that's how Loma Larga came into our portfolio. Subsequent to that, from 2022-23, we've had a great deal of success in discovering materials in Serbia. So we've had new finds, Dimitra Potok and Čoka Rakita, that have been disclosed there. We're also extending the mine life at Chelopech successfully. It's been operating since 1955. It's had an 8-year reserve life as long as I've been with the company, which is now 13 years. So really what's happened is actually the center of gravity has moved back to this European component, now added with the Vares asset, of course.
Okay, let's dig into that a little bit deeper, if I may, David. In terms of better in somebody else's hands, you've got a geographic outline now, which you mentioned is Loma Larga in Ecuador. You finally obtained the environmental license for that a few months ago. Well, what is the plan there? Given that it's now an outlier for you, is it time to monetize that via a sale? Because there are a number of developer and production companies that are Americas focused who it may perhaps be better off in their hands.
Sure. So let's talk about what has to happen. So what needs to happen there is we need to go and do some additional drilling. This will complete geotech, hydrogeology, and a little bit of resource development drilling. And that will allow us to conclude the feasibility study, confirming the assumptions of the feasibility study that's been out there for a number of years now. That then should take us to a decision point in terms of construction and advancing the project. Along the way, though, this is a project that's required some work in terms of making sure we have the different stakeholders on side. So we sort of call this a non-linear project. And the reason why we call it that is that you've got to be a little patient in terms of how you develop it. So good success in the last 15 months in terms of moving this project to actually get to this point of the EIA, including as part of that, the first prior informed consultation in Ecuador that's been done. This is handled by the government, but it's the first one that was done. So very happy with all of that, but there's still work to be done. So this one, I would say, good asset. At the end of the day, it's going to get built. It's going to generate real value. It's going to create employment both during construction, capital spend, operation for a long life. The problem with it is that we're not quite sure of the timeline of that. So to the question about, well, does it make sense then within our portfolio? So at the moment it does. But of course, we do review this periodically. And at some point, it may make sense, in fact, to decide to bring somebody else in, to have somebody else advance that project or sell the project. All of these things we would consider. We're not wedded to any particular project. But at this point, we believe that the realization of value for that asset is in our hands, not somebody else's hands.
Okay, and with that feasibility study process, when do you anticipate that concluding and you being able to deliver that feasibility study?
The thing to watch if you're looking for triggers is when we recommence drilling. So that's what we're waiting for at the moment. We are ready to commence that, and we're just waiting for the stakeholder approvals in order to be able to do that. So what we said is in the second half of this year, we anticipate recommencing that drilling, and we think that will be 6 months of work, and it's about 23,000 meters of drilling in total.
Okay, now let's go back to sort of the balance sheet, if I may. DPM is one of the few large gold miners with no debt on your balance sheet. What advantages does that give you? And if there are advantages in that, why don't more senior gold producers seek to eradicate their debt and be debt-free?
I think, if you look at it on paper, having some leverage is probably the right thing to do. But ultimately, we've been generating free cash flow at a rate which has not required us to even consider that. So we have a revolver that's been unused since the time that we completed the Adriatic project. And I think the last part of that was paid off in 2020. So the question for us has been more, what are we actually doing with that capital? And we've been having conversations with our shareholders for a long time in terms of what's an appropriate return. So in 2020, recognizing this was going to be the case, we were building cash at a rate beyond what we would need for what we could see as our uses. What we did is we implemented a dividend. So that was roughly $15 million a year. We doubled that in 2021 to $30 million a year, and that was intended to be robust and stay through the cycle. And then since that time, we've started to increasingly return any excess in terms of buybacks, culminating in about 75 to 80% of our free cash flow generated in H1 this year, going in terms of buybacks and dividends. So I think it was $130 million was returned in the first half of this year. Now, the reason why we did that is we were actually getting to a point where we're going to end up with $1 billion of cash on the balance sheet by the end of the year, something that we felt was way too high. So as much as though we've been aggressively returning money, $390 million in combination of dividends and buybacks since 2020, which has accelerated in 23, 24, 25, we're at a point where we're $800 million in cash at the end of Q2. So now the other use of that capital instead of reinvestment, and of course we've increased our spend on exploration, is also look at M&A, and of course that's what we found here. So we had $430 million of cash going into the Adriatic acquisition. So that brings us to a point which is in, say, the $250 million mark now. But we're still generating $100 million of free cash flow per quarter. So that's going to continue to build. So if I can just mention one thing, I think one point we've been particularly successful. We made a change in 2020 to put a lot more support into exploration, and we've been really rewarded for that. So we've been spending we went from, say, $12 million to $40 million as a result of some of the success our team was having. And if you have a look at Chelopech to this point, to a pre-feasibility level, we've actually spent $22 an ounce in the ground for that success. So, whether it's returning capital to shareholders, whether it's dividends, whether it's reinvestment in our business, whether it's investment in exploration, we feel that we've managed to hit the sweet spot in the last couple of years.
The gold price keeps going up. As we speak this morning, it's touching $3,700 per ounce. So this problem, if it is indeed a problem, it seems like it's only going to increase. So as the gold price marches higher, are you having to sort of revisit this capital allocation strategy, whether that's returning more to shareholders, investing more in exploration, something else? How is your thinking having to evolve to keep up with the gold price?
Yeah. So our organic growth portfolio has changed quite dramatically from the time that we first started all of this. So if we go back to 2020, we had a single project, 80,000 ounces a year for 8 years, not really particularly exciting. But since that time, we identified Chelopech, which at a pre-feasibility level is $379 million of cash in order to realize something that's going to produce 170,000 ounces on average per year at $644 an ounce all-in sustaining costs. So actually an even higher margin than what we've got. We just subsequently identified something that looks really interesting. We put out 2 holes on it now. This is deeper and 1 kilometer north of Chelopech in Serbia. And the first hole was put out in February at 190 meters at 3% copper equivalent. And we've just put out some new holes, one of which is 131 meters at 4% copper equivalent. So we see lots of opportunities. So the first thing we'll be using our cash for that we're building is investing in advancing those projects. So we see Čoka Rakita coming first at $380 million, completed by 2028 and in operation. We'll be putting out a feasibility study on that in Q4, so in proximity. And then we accelerating the work that we're doing on Dumitru Potok. So we've just added another 15 to 25,000 meters of drilling that we're anticipating to complete before the end of the year. So if you look at that success, we're looking forward to taking that team and starting to apply them to what we find in Bosnia, where we believe also we've got a lot of opportunities. So use of this increase in cash. Basically, we've got our own projects now. Now, this is not going to consume all of it. It may be a little over $1 billion in the next 4 to 5 years, but that's going to be less than we're actually generating. So once again, we'll look at, is there opportunistic M&A? We're very disciplined on this. We don't just chase things for the sake of chasing. But again, if we see that build-up in cash is beyond what we have uses for, then we'll be putting that into buybacks.
The mining sector is often accused of moving very slowly, so it's very interesting to hear that with this additional cash that's coming available, you're able to accelerate certain parts of the work programs and therefore accelerate the development timelines of projects in your portfolio.
Yeah. And we've been, I mean, some part of it is just opportunistic, right? You don't know when these projects are going to be discovered. And I mentioned that in Bulgaria, it takes quite a long time to actually develop a project. In Serbia, we're quite fortunate that it doesn't actually there. If you have a look at Chelopech that was built for Zijin, for instance, from a pre-feasibility to operations, that was 3 years. And if you have a look at our timelines, it's reflecting something similar. So this is why we're confident of starting the build for Čoka Rakita and then successfully identifying a resource and advancing that through engineering to what we hope is going to be a mine. That is also something you can do in a couple of years where it might take you a lot longer in Bulgaria or elsewhere. So we see an ability to control our own destiny in terms of success with exploration translating into projects and new production.
I mentioned earlier you had about an approximate 70% margin in the second quarter. How sustainable are margins of this magnitude?
Yeah, that's a great question. So one of the things we're really excited about is these new projects that are coming in, certainly Čoka Rakita, and if we have a look at Loma Larga, these are at very similar all-in sustaining costs. So you mentioned that our costs in the first half were a little over $1,000. For the whole year, we're anticipating that's going to be somewhere in the $900 mark, $850 to $950 an ounce, which is more typical for us. But the new addition that we're bringing in with Čoka Rakita, as I mentioned, is $644 an ounce, all-in sustaining cost. Dumitru Potok is going to be deeper, a little bit higher, but we do anticipate this portfolio of projects are going to be able to maintain those high margins.
Excellent. Now, if we can take a step outside of DPM, I'd like to ask you about how you see the competitive landscape in the gold and the copper sector for that matter. We just saw a mega merger announced in the copper sector. We haven't seen one in the gold space for, 5 or 6 years. Is there a need, is there competitive pressure to have another mega gold merger?
I would say that the pressure should be building in terms of consolidation. I think there's the opportunity to do that. So it wouldn't surprise me at all if you start to see more mergers happening. I think it's in the best interests of some of the companies to make that happen. I do feel that there's a lot of development companies that are really struggling for capital, and I'm hoping that that's being unlocked now with the sort of enthusiasm we saw at Beaver Creek and even what we're seeing here. There's definitely a sort of disconnect in the market in terms of the behavior of companies. But overall, in terms of mergers, yes, I do think there's an opportunity in the industry.
Because with the Newmont divestitures and now Barrick, there's a growing number of companies, certainly in that mid-tier band, single asset, haven't got a pipeline, so consolidation would seem to be a good thing there. David, let's draw our conversation to a close. What are some of the key catalysts that our viewers can expect to see from DPM over the next 6 to 12 months?
Right, so there's going to be a lot of news, I think, coming early. So I mentioned that Čoka Rakita is set to produce a feasibility update in fourth quarter. We're also going to be putting out some additional information on Loma Larga in terms of its capital costs and operating costs, having updated that. We're also going to be giving additional information as it comes available on Dumitru Potok and progress in other exploration activities. And of course, we're going to be updating on our successful integration as we progress that at Vares. So lots of different points, I think, of reference. And I think they're all pointing to what I was talking about. You've got this steady growth coming ahead of us. We're basically able to effectively use our capital with the exploration, with the build of these projects. And I think the other piece will be around what we do with returns on capitals to shareholders.
Excellent. A lot more exciting things to come. David Rae, thank you very much for joining us today.
Very much. Nice talking to you.
And we have a lot more to come from the 2025 Mining Forum Americas here in Colorado Springs. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.